Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. And if you like my video and if you want to support my research, you can donate me using Google Pay and Phone Pay and Paytm. Let's go to the review for Friday and then we will go for the prediction for Monday. Nifty ended up in the negative, 14,938.10, 142.65 points in the negative, 0.95% in the negative. Opened around 14,977.95, which is well below the previous closing. And the low went around 14,862.10, high went around 15,092.35. Let's go to my prediction review. In our data, it is clearly shown the volatile market, but with a negative impact because two indications are shown in the negative, other two indications are shown in the volatile. So whenever we get the difference of 1 point in the indicators, that is indicating that the volatile has a chance to happen. So the difference of 1 point indicates that up and down will be there in the market, but the other two indicators clearly pointed that it will be in the negative side. So that is where the market pre-market also confirmed us, because the previous closing is 15,080.75 and the pre-market opens 14,977.95, which is well below the level but inside the volatile level. So the previous closing, from that level it has opened below only, but only thing is that it is inside the volatile level 1 and volatile level 2. So those two levels inside only the market has opened. You can check that the volatile level 2 and the volatile level 1, the market has opened inside it, which means the market is opened inside means it is an indicating the volatile market but with a negative impact. And as per the negative closing also happened, and the market started to move towards to the downside but not able to break this support level on 1, which is the stop loss for the normal bullish market. But still we know that the downside, which support level has a huge level 1.57 points, so we know that the market will not able to break. So it has a chance to recover. After went low, it has recovered from that low almost 80 points and closed in the negative because of the impact of the market, because we know the trend is on the downside, only the oscillation in between the downside itself, because the pre-market has the chance to show once the market is opens and it is showing that the market is not able to break the support level 1, and that is a basic formula and rule for us. The extreme bullish market stop loss will be on the average, overall average stop loss, and the normal bullish market stop loss in the support level 1. And both low and high is also not matching, so that on Monday we will see a once again volatile market. It is already shown, so I'll also explain how it has not matched in our data. So the low which needs to be matched, low or high which needs to be matched 3 points or in the stop loss of 10 points. For selling means plus 10 points, for buying means minus 10 points. So the low 14,862.10, which is not matched in the data because it is in between these two levels, which is not matched with 3 points or the stop loss level. 3 points means that is the perfect match. Stop loss means it is matching but in the stop loss range, so it is not matched on those side in the low. While if we check the high 15,092.35, that is also not matched with the 3 points. It is close to the 3 points but not near to match, and it is not in the stop loss as well. So that both side it is open, and we know we already have a target in hand which is 15,320.42 on the positive side, and negative side which is 14,350.03. So both targets still pending, so almost it is 1,000 points gap we have. So we must keep both options in hand to trade on Monday. That is the indication the high and low is not matched, so that the pre-market opens in any level. At present, the SGX Nifty is showing positive sign, and let's go to the group calls. Whatever the calls we given, we specifically mentioned about the market on Friday. It is going to be a volatile market, but with the negative impact, because the data are already shown like that, and the par value is also indicated that the market anything opens 14,791 above, it is trying to move towards to the positive target 1, positive target 2, but the positive target itself, it shows the negative point which is 151. So our data is also very much clear. Today it has closed in the negative, and these are all the calls which are parameter match. So bullish market, still bullish market means the stop loss not able to break, but still we know that it is trying to move towards the positive, but the opening as well as the data, two data also in the negative, so it is not able to go towards the bullish side, but it is trying to recover from the low because of the bullish market. Stop loss is there in the negative side heavily, 14,833. And I specifically pointed out um, our group calls because we already had this particular position. We bought it those two 14,600 call as well as 14,600 put, both put together. We took a risk of somewhere around 80 rupees. I'll show you that. Both put together we bought it somewhere around 80-85 rupees. So I specifically asked to exit that particular if it is goes, because anyone wants to keep it for F&O closing day, because we have the target on the downside which is 14,350.03. If the market is reaching that level within this week itself, this particular put option of 14,600 will go to 250 to 300, but with the risk of full risk, whatever the money we invested, that we need to take as a full risk. Otherwise, today itself I asked to exit if the both or in any one particular side, if it is goes to 120 plus, we can exit, and it is almost went close to 120, and I asked to exit as well. And these are all the calls which we hold in, and I specifically asked my clients to trade strictly on the basics of these parameters, because it is volatile day, we need to keep both options in hand. And on Friday, small traders must have to stay away from the market, even though we given this particular one more call, which is I wanted to explain the way how the risk is involved only for the high risk traders. Even that particular fresh call also, low risk traders strictly stay away from the market, because even these two levels will go down. So that is the point which specifically pointed out and explained here how the risk is involved. One more call which is given for a 1 week hold, 14,700 put option for buy some around 105 to 110. It has went almost 135 plus today, I mean on Friday. And whenever we have that kind of a move, I specifically asked to exit, but today I didn't ask to exit because of this particular call for high risk traders. So if we hold this particular means if the market goes and reaches 14,350 range, this particular will go 350 points to 400 points. So I asked to keep this particular without an exit, but we took one insurance for that in the call side 15,400 call option. We bought it somewhere around 30 to 32 range for the insurance purpose. If the market is open in the gap up on Monday, we will exit from this particular call 15,400, keep this 14,700 in hand and exit for the some decent range. And this is the indication for the Monday, which given early around in the afternoon itself, because we need to know how the market is going to be. Three indications are shown in the negative side, one indication weightage is shown in the positive, which means the pre-market open might be open in the positive or it might go in the bullish as well. So that is the one indication which shows that we need to keep both options in hand. And one particular client, he asked about 14,600. He bought it somewhere around 79. So I asked him to exit somewhere around 92 because of the level of indicated for intraday it shown like that. So he exited somewhere around 92. He sold it around 92. So it came down after that he sold it. It was somewhere around 60 points. So almost he saved 32 points in this particular 14,600 put option. We need to know the risk. See, it has came down like that after he sold somewhere around 92 in this particular range. It has came down from that level towards to the downside of 60. So we need to know the risk because he is a kind of a small trader. High risk traders can hold, and we holding these two combinations, which is 14,700 put option and 15,400 call option, and 14,600 put option and 15,400 call option. These two combinations we are holding because of the positive side 15,320 spending and lower side 14,350. Both it is pending. So we may not know how the market is going to behave on Monday because we have the data in the volatile range once again on Monday as well. So this is for the Monday market prediction, which indicates that three indicators are in the negative. One indicator is on the positive direction, which clearly points out 20% chances in the positive and 75% chances in the negative. But still pre-market opens needs to be watch out, and the pre-market stop loss, how it is going to support, all we need to watch out. So those will make this particular day become extremely bullish as well. So if the pre-market is like that, so these are all the ranges for the support and resistance levels. These are all the points for the support and resistance levels, and the par value is indicating anything opens above 15,001.06, then the market will try to move towards to positive target 1, positive target 2 and positive target 3 up to 354 points is also possible. The maximum side which shows 476. On the downside, if the pre-market opens anything below the par value, if the pre-market anything opens below 62.96, then the downside targets will activate. Negative target 1, negative target 2 and negative target 3, which is 249 points, the maximum 350 points. It will get activated. So we need to watch out the pre-market opening with our par value level, how it is going to be. And these are all the extreme bullish stop loss. The pre-market needs to open 14,933.62 above, means we need to keep stop loss in the 14,886.27. that is the extreme bullish market stop loss. And the normal bullish market, which anything opens in the positive, but the stop loss need to be maintained 14,928.1. 0. So if those stop loss is not getting hit, market having chances to go towards to positive side, having the chance to go towards to positive direction. On the other hand, the extreme bearish market, if anything opens below 14,448.47 in the pre-opening, then the stop loss for the extreme bearish need to be maintained 14,906.27. If this particular level is not getting hit, then the market will having the chance to fall down heavily. The normal bearish which we have is anything opens in the negative, even a point in the negative, the stop loss need to be maintained 14,954.08. And if anything opens in between the volatile level 1 and volatile level 2, it will be like a volatile market, but it might have the chances to activate the above 4 stop loss according to which side it is breaking fast, and that activates those stop loss automatically. That is what the levels we saw this particular already on um, Friday as well. And one more key point which we want to keep it in mind is that on 8th Monday, the volatile level came inside the inside the negative itself. So which means the normally this is an indication that the market is having the chance to go bullish too. Why? Because it should not come like that. Recent past, I saw last 10 days of the video, and predictions, some of these data and warning signals are coming. Why? Because the market is not steady at this point of time. So whenever the market is not steady, or the market is not know which side it has to go, the market itself shows that it has a tremendous pressure. So we need to play cautiously, and we need to keep both options in hand. That is what the indicators of my prediction shows, that on Monday we still have the chances to go extreme bullish, even though the data are showing some kind of a negative 75%, but this 25% positive, which might have the chances to trade extremely bullish if the data and the pre-open supports and the extreme stop loss is not got it, then this particular day may become a bullish and extreme bullish day. So that is the warning signal we got. So that is the reason we kept both options in hand for Monday, as we kept these, because we are keeping 15,400 for 30 to 32 rupees for the insurance purpose, because the warning signal came. Whenever the warning signal came, means it might have the chances to go like that. And I'll show you the XJS Nifty. At present it shows it has a good chance to go or open in the gap down, and it might continue that positive momentum as well. At present it is showing 122 points, so which we got the doubt, because of the US market is also around 1.55% in the positive. So which means the pre-market, if it is opens like that in the gap up, which is 15,017, but we our market might have the points of difference, but it might be somewhere around 20-30 points. Sometimes it may have the chance to open in a huge different gap manner. The HX Nifty shows 120, means it might open 20 points also, we may not know, but still that is the warning we got it in the HX Nifty as well. So the level which we keeping those I mean this particular, for the safety purpose, which will help us if the market is opens 120 points as HGS Nifty shows, means we will have the chance to exit some good profit with the consideration of how the high is matching 15,400. We will exit with good profit, because we know the levels, it might go bullish as well. So we will plan according to the data's exit. Let's see how the market is going to give us on Monday. It is very clear that you need to keep both options in hand. Once again, I would like to remind you that these two targets still pending, 15,320.42 and the downside 14,350.30. So anything can happen. So you must have to keep both options in hand to trade on these kind of target dates. Let's see. Thank you.